Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a daily Forex market analysis and live trading breakdown for you, and we have a lot of markets to cover today. We got lots of action that's been going on in the currency markets, and we have a lot of other markets that have been influencing them as well, as far as metals and interest rates and geopolitical things. So we have definitely have a lot of ground to cover. Before we get into it, let's get to our disclaimer here. So we just want to remind you this webinar is for illustrative and educational purposes only. With that being said, we're going to skip past our plugs and get to our live action screen. Now we're here at the Unlocked.com website. Little tongue twister there today. I already have the workstation page pulled up. And we have the dollar index chart here. Now the dollar index has been trending lower obviously for the past couple months, and a few sessions back it set a nice little extreme low here around 95.70. 2 sessions back, excuse me, 3 sessions back, we set a nice little lower move high, and it looks like the dollar index is starting to settle into a consolidation situation. Or is it? I think actually it's starting to get ready to make higher move highs. So we have a bunch of signals to go over. Let's start with the biggest component of the dollar index, the Euro-US dollar. The Euro-US dollar had a sell signal here the other day. This is a bearish engulfing line. It's a high probable Japanese candlestick patterns, which, by the way, there's a book called that that I have written, which you can get on Amazon if you want to learn how to trade this signal. What have we done today? Well, after the past few sessions, it looked like the sell signal was kind of just more like a consolidation, going nowhere thing, right? Well, then we had yesterday, the market broke, and then today we had followed through with a lower move low on the intraday basis. What does that mean? We've made lower move lows, lower move highs. That is indicative of what now? A neutral to lower trend. Also, we have a very small head and shoulders pattern that has also been triggered here. We have a shoulder right here. We'll put this right here. We'll do an S. Make it small because this chart is really tight. And then we have another one over here, which is where right before our sell signal. And this will all look clear as soon as I get this last shoulder up here. So let's just say, for hypothetical reasons, that this high here was a shoulder. We dipped down here, made a neckline, then we rallied up to this high point. The next day we have a bearish engulfing line sell signal, which triggers, excuse me, the short-term top. Then we have this neckline here, and then we have this rally up into the shoulder, which would be yesterday, the high that was made before the market fell down and started badgering support. Now we can see today that we are trading right below the low of yesterday's trading session, excuse me, but off of our low from the session today. So how far can we go? Well, that's a different story. Originally we had, this is a tale of 2 targets. The short-term target from this bearish engulfing line has already been hit. This was just a small little reversal that we were initially looking at. Then we have the bigger move here. This from this low right here. Oops, this is the wrong charting thing we want here. We want a fib. So just to give you an idea of a short-term target, we put the fib up here, and then we're going to find our little horizontal line here, and we'll put this at the 50% mark. So off of this low here, that would have had us going down into this area right here, okay, for as far as a short-term correction. This would be from this bearish engulfing line if this was coming off of this low here. That's the key here. We don't know if it's from this low, or this big low here. Now, the farther back we go, the farther and more distant our target is to the downside. If this is just a corrective move right now and it's symmetrical, then this head and shoulders as well as this bearish engulfing line should fail. But I don't think that that's going to be the case. I think that we have a really good chance of targeting this area right here. Let's see, we want our pen. Let's get a little area of this from here. So this was our starting date right here. And we're going to go into like this far out. Okay, so we'll clear this out. and you can see this little target circle here. So not for our head and shoulders, but for this bearish engulfing line that was this first red bar after we made the high. This is the area we're looking for it to break down to. So 111.48 to 110.81. So now that we've dwelled on the euro for so long, it's not just because it's one of the biggest one, but this is one of the reasons why we're looking at this change in the dollar index. Should this head and shoulders actually be a valid head and shoulders pattern, and we'll know that after the next week or so, that would put us most likely trading down into this lower area. If that happens, you're going to see a big rally in the dollar index because the euro US dollar itself is one of the biggest components. What would support this thesis, if you will, that the US dollar is turning? Well, let's go to the second biggest component of the dollar index and look at the British pound US dollar. Oh, look at that there. Well, we don't have a head and shoulders pattern that was forming, but we do have another bearish engulfing line that was triggered on the same day last week. Last Thursday was a big turning point for the dollar. The question is it going to continue? Was it just a corrective move? I mean, after all, the dollar has been getting badgered for over a month. Having a little bit of a correction for a few sessions would be normal, correct? Nothing out of line with that. So now are we basing and getting ready for this dollar bear to emerge and claw its way up to to crawl its way down to lower levels and higher levels for obviously alternate currency crosses? Or are we going to see the dollar bull rear its horns and start charging higher and then start to knock back these other currencies such as the euro, the pound, and the other ones that we're going to cover today? So we see the euro is already under pressure, the pound's under pressure, and today it is slightly lower. Volatility is kind of tight, but it's definitely looking a little bit weak. So I'm going to say we're going to key off of yesterday's high, and we're definitely going to key off of the low from Monday. We take out this low from Monday, what would that mean? That would mean a lower move low after a lower move high, which would confirm a bearish trend, correct? Lower move lows, lower move highs are indicative of a lower moving trending market. And that would help validate our sell signal here. Now with this one, we're going to use this low and we're going to use this high right here. Let's find out where we're going. Now remember, the first line of support that we're looking for downside targets could be where we're just setting a correction for the dollar. If this is just a corrective move for the dollar, then we're most likely going to hit these short-term minor targets. Like see here, the pound doesn't have as big of a wave to go down. This could easily hit this. It could hit it today. It could hit it by Friday very easily into this dollar 24. What would it be? $1.2437 here to $1.2447 right there. So basically, almost right where the market's just trading above, very close to where we're looking at right now. So it could easily be there and then touch into this zone and go sideways. Remember, if you look at this whole market as a whole for the British pound, let's put another line here, and we're going to change this to, we'll just make it pink for right now, and let's change it to a solid line. Okay, so we're just using this because we need a contrast here. Okay, so this pink trading range here is the majority of what we've seen for trading for the past few months for the pound US dollar. So even if we hit our targets here, does that make us overwhelmingly bearish? No, it puts us right into the heart of the trading range where the average price for the pound has been for quite some time. So right now, short-term sell signal there. Let's see what we have going on in the US dollar Swiss to complete our European crosses versus the dollar. Well, we have a short-term buy signal here that was triggered the other day. This is a high probable Japanese candlestick pattern, which you can also find out by reading the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. Or you can watch more of our videos, and sometimes we point out the names like we did some of the first two markets. This one we're not, because we'd like to get you to read the book. So anyhow, regardless, it's still a buy signal for the US dollar Swiss. Does it make it a bull? Absolutely not. This market has been making consecutive lower move lows and lower move highs. However, now we might be doing the opposite. If this buy signal is valid, then this high from a few sessions back will be the test. If we get above this area here, that breakout above this line here at 95.57 would have us not necessarily a bull, but coming back up into this area here somewhere. So now let's see, how far can we go? Well, let's just take the last high down to here, and we'll go to here. And now, oops, we don't want that. We want a horizontal line. And we're going to put this right here. Let's go back to our dots. Okay. So with this, we now have a corrective move here for the Swiss, and as you can see for this market, it's not really that much of a corrective move either. So we could just be seeing a dollar bounce, which puts us back into the consolidation range of the dollar index, or we may be seeing a complete turn in the dollar. Either way, we're looking to press the current upside correction for the US dollar because of what is going on with these signals. We have buy signals in the dollar, we have sell signals in the euro, sell signal in the pound, sell signal in the Swiss. So as far as the dollar versus the European currencies, we see dollar strength. So maybe that's the reason why the dollar index is getting stronger and the other ones have nothing to do with it. Not so. Now, we've had a divergence of currencies over the past couple months, whereas during the initial coronavirus scare and what have you, we had all the currencies getting pounded versus the dollar. And then it swung the other way, and then after that we had a complete swinging around. Some were trending with, some were trending against. You get the idea. Now I think we have a critical turning point that was reached last Thursday and is playing out over the course of this week to confirm a potential longer-term trend change in the dollar, meaning that overall, we should see dollar strength leak into the trend and set the new trend for the next probably 2 to maybe upwards of 5 weeks. Does that mean it's going to happen? No. But we're looking for confirmation, and right now, over the next couple sessions, we either will or we will not get it. If we rally above this 95.57 area here, what does that do? Well, it puts us into this target zone. Does that mean we're going to stop or keep on going? No, we could definitely go sideways here for a while with the US dollar Swiss. But what does that do? It still makes the dollar stronger. So how quickly we get there, that's a whole nother story. So now let's go to the US dollar Japanese yen and see if we have something going on here. By the way, just to let you know, we do have positions on here in the euro. We are short the euro US dollar that we were shorted back on earlier today, and we also have a US dollar Canada position, which we are long. So we are long the dollar and short these other currencies. As you can see right now, we are currently up in the euro position here. Now, if you look at these averages here, we've had quite the run up. Okay, so for us to have a nice little correction and maybe even dip down to catch up to this average here around 111.60, that is totally normal. You can see that we had a run up here, back here in this chart, and then why wouldn't it come down into this? So we're looking for the average to catch up with it. Now, if the market could stay right where it's at, and this average could catch up in the next couple of sessions and be up here where the market's trading now. However, right now, we've made, once again, we had a lower move high and a lower move low. That sets us up for a downside trading market. So we look at, that's the euro US dollar Canada, and then we have also, the euro US dollar, and this is the US dollar Canada, which we are long here. And as you can see, the bottom average, the market touched down on it. Now, this is an interesting pattern that we're going to get to once we get further into the webinar. So US dollar Japanese yen, we have a buy signal here. This was a bullish engulfing line here. You can learn more about how to trade that in the book, but we'll just take a little look here. So where do we have as a short-term corrective spot here? Now, the volatility in the yen has either been absolutely zero or it's been fantastic. You can see that it's had more action in the past 2 weeks than it did in like almost 2 months. I mean, look at how sideways this was. Now, we had an initial buy signal here. This is a 3 inside up target. And then it was capped by another sell signal here. This is a bearish engulfing line, and now we have a bullish engulfing line. So all 3 of these patterns you could have traded in the past month and a half. Well, 2 of them definitely have worked, and you would have hit your targets. Now the question is this third one going to manifest itself or not? We shall see. And remember, if you want to learn how to trade these patterns, you can either continue to watch our videos, subscribe to our YouTube channel, Forex Trading Unlocked, or read the book High Probable Japanese Candlestick Patterns on paperback or Kindle version on Amazon.com. All right, so that being said, the last 2 sessions and even today look kind of like what it did for the past month and a half. Not a lot of action. And that's after we swung around. We had a breakout to the upside up here, and we pierced. How high did we get here? We got up to 109.11, and now our low here is 106.57. We're trading off that by less than $1. So let's see. We've made a low. So short term, we've made a lower move high. Ish. Now let's see whether we get some follow through one way or another. So this one's kind of quiet. So for the Asian trading zone, we're wondering what is going to happen. Well, that's a good question. But here's something we can also look at to kind of give you a gauge. if this market is neutral to higher, most likely it'll stay above this upward sloping support line. Okay, and then we also have from here, we have this line coming in here, which is interesting because this market is wedging. It's been going sideways, but it looks like it's going sideways in a bullish fashion. We'll see how this manifests. So strong the dollar there, potentially, but not too much of a signal there. Now we have the Australian dollar, US dollar. Well, this market's been trending against the dollar for quite some time. Now, interestingly enough, look at what has happened over the past couple sessions. We pierced through upward sloping support, held above it, and now here we are right here. Are we going to collapse, or are we going to continue rallying? Now, we've had quite the run-up in this market, and a correction would not be outside the realm of possibility. Now, especially if we have a big turn in the dollar. There is a resurgence of the coronavirus in Florida and some other states around the United States. If this starts to really peak things again over the next week or so, I would probably expect to see a continued sell-off in the stock market, and that would hopefully most likely support the dollar because interest rates we know are pretty much static. However, that's another bubble you got to be careful with, because now the Fed is buying the corporate bond market. That tells me that obviously they think that that market's ready to implode. So they're trying to keep everything afloat and help us ride this curve as best they can. Hopefully they can. We'll see what happens. But right now we have a potential turning market. So this Japanese yen is kind of sideways to higher. Now this one here, interesting enough, obviously we came off a higher move high. We made a higher move low. So these two major points here, those are the big swing trades. If we can fall and take out this low, what would that mean? That would mean we would have made a lower move high after a higher move low. And then if we can fall through here, obviously that would set us up to be neutral to bearish for the short run. Now the New Zealand dollar, US dollar, has been doing pretty much the same thing. Now this market has been on a really steep incline. If you see this one here, this is doing the same thing as the US dollar Canada. So we're going to key off of the last recent swing high and the last recent swing low for our breakout points. Anything above or below, that is what's going to confirm our trend, either continuation or turn. Since we're looking for a dollar bear, or excuse me, a dollar bull to arise versus most currency crosses, I would say that if we definitely take out the 63.85, not necessarily look out below, but to give you an idea of how big of a correction we probably could have, we'll just break out the old Fibonacci. Remember, Fibonacci, this is not always like the guideline, but this gives us always a really good target range. So with this, we have, let me get rid of this. Okay, make it clear. Okay, so we have 62.54 down to 61.77 in this area here. This would be a really good target area. Now, here's something I want to show you that we've been talking about signals. We've had them all over the place. Oh, look at this. This red line here, which is after the market had made its higher move high, that's a bearish engulfing line sell signal. What does that mean? That means, oh yeah, the market is looking for a short-term corrective move versus the trend. This is a counter trend trade, so it is, since the market's been obviously in a bull market since the middle of March, this would be a counter trend trade. As far as how deep of a move we can get, once again, this is our target zone off of this low right here. We'll see. We need a failure first here at 63.85 to confirm this for any major sell signal. But otherwise, we do have the New Zealand dollar, US dollar bearish engulfing line there that has us correcting down to here. So maybe, as you can see, these lesser currencies or lesser major crosses, they're also looking to correct, some of them more extreme than others. So we have to see how these grind down into these levels, or whether they accelerate the trend into these levels. And then we can start to gauge things after that. So right now we're looking for this market to continue to hit support. Taking out that 63.85 level obviously is the key. Now if we obviously take out the last hot swing high here at 65.88, all bets are off. And some other markets to see why we're getting bullish the dollar. The US dollar Turkish lira, which had been in a nice corrective mode here. Look at how this slammed down the whole dollar for the whole month of May into June. But then we had this, a 3 inside out buy pattern that has continued to pressure resistance, and we took out this last lower move high. So what does that mean? We made a swing high up here, kept on making lower move lows, lower move highs, made a lower move low. Now we've made a higher move high. So we are now neutral to bullish, and since this was a major trend was up to begin with, this was a counter trend corrective move. So are now back into a directional trend trade, confirmed by taking out this last swing high here that was capping resistance. So today is a big deal, especially if we can settle above here. I wouldn't doubt that you're going to start to see the Turkish lira get another boost back up into these higher levels. Now, but this is a market where the spreads are very wide. You have to have deep pockets and you have to know what you're doing. Margins are high. I'd be very cautious, but it's a great signal for us trading these other currencies. U.S. dollar Mexican peso had a bullish engulfing line buy signal the other day last week, followed through by a big kick and rally here, and then you could see it reverse gears, looked like the market wanted to tank, and then over the past 2 sessions has found support. So we're going to key off of this last low. We've made a higher move low after a lower move swing high. That's indicative of what? A neutral to higher market. So let's see what happens if the market can maintain its support here and stay above 21.87 pesos to the dollar. I would look for a challenge of this last swing high right here at 23.013 pesos to the dollar. In fact, you know what? Why don't we go and look and see what we have going on in our NADEX positions. Oh, no, we don't want to look at that. We don't have that yet. Let's get that in the next video because that's going to be too much of a... We don't have any of the lines drawn in the strike prices. Okay, so since we have this, we'll look at some options positions for tomorrow because today's Wednesday, and for the last couple of days, especially since we're kind of low here on this signal, remember our buy signal is right here, kind of at this level of 21.87. So we have this nice little low that we're trading against right now, and I would say anywhere in this area here, see that the FX market here is it's pretty wide and the margins are pretty high. So unless you're experienced and you know what you're doing with the currency markets, I would stay away from this one. But there might be some binary options that possibly, if the pricing is right, you might be able to catch a play over the next day or two, especially if we have a nice little rally that challenges this 22.99 level. Now, it's been kind of quiet the last 2 sessions, and we haven't really been breaking out of the range of the past 3 days. We've contained everything since this big bullish day right here. So since we're still in this, I would be very careful about trying to jump in on this trade because it just could go sideways here. And so we got to be careful with the options pricing. But if there is some value, and we'll look for that in tomorrow's webinar, we might be able to catch a trade that's basically a 24-hour trade. All right, so let's see the U.S. dollar Canada. Here's another one that is kind of showing us that this market may be turning around and U.S. dollar support may be ready to creep into the market. So remember this gap that was here, and we were wondering when it was going to get filled. Well, obviously we know that it has been filled, and it was filled a couple weeks ago. Now we have this low here, and then we have this, what is this? A buy signal here, this first one here. We set this low on June 10th, and on June 11th, that's this big up green day here. That's our bullish engulfing line that sets us up for what? A corrective move higher. Now we've been making lower move lows and lower move highs, so the key is to use this last low as our support level. And then we have something very interesting here, and this is a great little signal. We haven't used this one in a while, and I'm not going to tell you what this is, but if you read the book High Probable Japanese Candlestick Patterns, you will know how to recognize this. Now this has not completed itself yet, but if today, see this second arrow, so we had our first buy signal right here. That was our first indication that we're looking for a corrective move for the dollar versus the Canada. Then we have this little corrective break that happened afterwards, making the position look like, oh, geez, is this going to be a good position or not? However, the thing about this position is that if you read the book, you would know that your entry line would have been right there, okay, at 136.21. the market's trading at 135.64. As I said before, we have a position on here in the US dollar Canada. So you're getting a chance to buy into this initial buy signal at a better price. Are we telling you to buy this? Absolutely not. Remember, we're already in the trade. We're experienced. We all know how to manage this. And here's the thing is that we have an intraday signal that triggered this already as a short-term buy. So we may be out of this trade before the session is over. However, if we are still in this trade and the session is over, the market, if it settles not where it's at right now, but if it can settle above this $1.3621 area, that would be huge. That's a big rally. Is it going to happen? Probably not. But if it does, that definitely sets it up for a breach of $1.3691, which would help to reinstate our buy signal and also set off what? It would mean that we would have made a lower move high, a higher move low, and then we break out to the upside and make a higher move high. So this is the key. So if the signal here is valid, right now is an opportunity to get in at a much better price than originally that you would have been able to on the next session after the signal had been triggered. And the risk factor here, you know what it is. Now, this is pretty wide. It's $1.3310, so this is not for the faint of heart. This is a big trade here. Now, because of that, what are you looking to capitalize on? Well, this is where you're looking to go. You're looking for a rally to go up into this area here. So this is not just a short-term dollar correction we're looking for here now. Now we're looking for a big correction in the dollar to catapult this market up into this area here. This is the trading range that we're looking for. Does that set it up to be an overall bull? Well, this market had been a bull. This could be one major correction here that we've seen, and then we are setting the tone, the potential bottom. Remember, this gap got filled. This was a big deal. If we found support in this gap and start to come back here, that's dollar strength, folks. That's dollar strength. That's all I can say. So, and now we have a trend line here from this high coming down into this region here. Oh, look at that. So let's move this arrow right over here and let's make this a little clearer. So what does this mean altogether? Remember how we were looking at started this webinar out? If you've been paying attention and following through, I know it's a long, most people only pay attention for 5 to 7 minutes. Our webinars are about information, giving you stuff you don't get anywhere else and explaining it to you and teaching you along the way. So here you go. This is what we're showing you here. We had the initial buy signal, correct? You're with us on that. You know the bullish engulfing line. Now we have this pattern here that if this market settles, like I said, above this $1.3621 level, then we have not just this first buy signal here, but then we would trigger another continuation high probable Japanese candlestick pattern. It doesn't happen very often, but when it does, it typically is a precursor to an accelerated move that usually doubles where it was at, meaning that since this low here is at $1.3310 and this high here is at $1.3691, that would be what? That would be 380. That would be 380 from here. So 380 from here, 36, that puts us at 39.90, which would be right here, plus another, let's see, 39.90, and plus another 80 would put us at 40.70, which puts us right into this mode right here. So 40.70. So it would be right around this area right here. And we'll make this line a black line and make it solid and make it, there we go. Okay, and we'll change this to, okay. So right in the heart of this target range here is this $1.4070, which is right in the heart of the average of this whole range here. Remember, the US dollar Canada was the first market to hit a major extreme comeback, set a base, and start to consolidate for a month and a half. While other currencies were still swinging, this is one of the ones that consolidated. It fell out of bed. It filled this gap. Now the question is, are we just in a corrective move higher? Remember, the overall trend is lower. Lower move lows, lower move highs. But we are now in a situation where we have hit the lower move low, the lower move high, and then a higher move low. If we hit a higher move high, what does that do? If we take out this $1.3691, we have this downward sloping resistance here. So if you can picture this, if you will, over the next few sessions, if it takes out these levels and then boom, comes up above here, it has a neutral trend. Not only is it a neutral, it's a short-term trend as a bull. The longer-term trend will be neutral. And then even the longer-term trend would then be what? Bullish, because that would set a base, which would be a higher move low than this after this higher move high on the super long term. So now we're getting ahead of ourselves. We're not saying that we're going to be a dollar bull with the Canada now for the next like 6 months. However, this current situation is giving us a very ripe opportunity for longer term gains. We'll see how this position manifests itself. Remember, we are long the US dollar Canada. Now, we didn't get in on the daily signal yet. You have to wait for the daily signal before you get into this trade. Okay, want to press on this. We're not trying to tell you to go buy it or sell it. All we're saying is for sure, if you like this signal, read the book first, by the way, before you try and actualize the trade. But we do have the potential to see how this works. And remember, we started this webinar with how the dollar index looks like its short-term corrective move that began last week, that looked like it started to want to kind of wane, you know, over as this week began. If you watch our video from Monday, you would see that. But now, with what's going on in today's session, and as we set up into tomorrow, especially if we have positive closes for the dollar versus these other currencies, then we are really set up for a nice little continuation of this corrective move in the dollar. So let's go back really quick to the dollar index to remind you that we had been trending lower since middle of May into the middle of June, basically. Now we had this little setup here. We made a lower move high, and now we're hopefully seeing that we maybe have made a lower or higher move low. And if we take out this 97.52 area, that takes out this downward sloping resistance, which breaches the short-term downtrend and sets us up for a intermediate, medium-term sideways to higher trade. And then the longer-term trend we know is definitely here. So we got to breach this other area here before we get majorly bullish. But right now, from where we're at right now at 97 area to get us back up to the 99 even area for the dollar index, it's not outside of the realm of possibility. Let's go back to the Euro US dollar, which is where we started after the dollar index, and see what kind of action we've seen or has happened. And look at this. Wow, the market has continued to batter. It was much higher before. Now it's bashing the lows as we speak. In fact, it's totally hanging on the low from here. This is $1.2112, or excuse me, $1.1212. We're trading at $1.1214. So we're right off of the swing low that was over here for the other neckline for our head and shoulders. If we get a close lower than where we're at right now, especially below this low from here, I think that this target zone here is very likely to be reached over the next, I don't know, 2 to 5 sessions. And remember, this market could grind. It doesn't have to just go in a very quick vertical way, but markets tend to go out like they come in. So let's just say that this is the midpoint here of this move. You can see that here was the consolidation, here was our consolidation. So if we're going to fall through, maybe we're going to trade like this and then slip into this over, what would I say, the next 2 to 5 sessions. Let's say we settle just a little lower here, so then that would leave us like that, so that this one, so then it would be 1, 2, 3 to 4, 5 sessions before we would get all the way into the bottom of this target zone, or maybe even lower, or find a base. So that's where our timing is. Everything seems to be falling into place right now. Anything could happen. We can have a reversal of fortunes. Anything can happen in the markets. Nothing is for sure. But right now, it seems like we have a very good handle on how things are going and the way things are moving. So if you remember, if you want to know how to trade all these high probable Japanese candlestick patterns, and as you can see through us covering all these markets, there are a ton of them. So, but if you want to know how to do this, then what you're going to do is read the book, High Probable Japanese Candlestick Patterns, available on Kindle and paperback versions on Amazon.com. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. Please subscribe to our YouTube channel and spread it around to your Forex and other traders in the online trading community, because these signals and the lessons learned from this can also help you in other markets. These high probable Japanese candlestick patterns for sure can be used in all futures, Forex, stock, options, you name it. They work everywhere. I've been trading options, futures, and stocks, and FX for 30 years now. I've been in the business for 31 years, and I've been trading for 30, so I think that I have a little bit of a clue on how these signals work. So read the book, keep following our videos, and pass it around, and let's keep on moving forward and see if we can pull out some more positive, profitable results in the trading environment.